people don't plan to fail. They fail to plan, right? And you got to have a plan.
100%.
And so, but yeah, I love those numbers, Ryan, because maybe 15,000 on the purchase price sounds like maybe a big deal. But when you see this actual savings that you're getting, I mean, you're saving 20% roughly on that. Like when you look at the actual payments, I think you showed about 3,300, but you showed that first year payment on a 2-1 buy down of about 2,600. I mean, that's a solid 20%. Hey guys, welcome back to the channel. Michael Garcia, IC Life. Today I have a special guest, Ryan Hrisca. He is a mortgage expert, and so I'm super excited to have you today, Ryan. As you guys know, I'm really big on real estate. I'm really big on helping people position themselves to get into a home, because I truly believe, aside from yourself and your ability to go make money, real estate is going to be your number one biggest asset. And it's going to really help you improve your life year after year. It's going to make you inflation proof. It's going to allow you to capture that appreciation. And then down the road, give you put you in a great position to potentially use the equity in your home to continue to expand your wealth. So anyways, I'm super excited to have you today, Ryan. I just want to kind of get into a couple things here. Number one, you and I share that passion for real estate, but one of the things that really caught my attention was you had mentioned the 2-1 buy down. And I think this is a really great way for people to kind of ease their way into a home and really make this work for them. So I really wanted to just welcome you and have you kind of share your experience and expand on that.
Yeah, thanks, man. I appreciate you having me. It's great that we can kind of work hand in hand because I think kind of like we mentioned is, real estate is your greatest asset, and then getting with Michael Garcia to protect that greatest asset is almost just as important as purchasing that home and your greatest asset, as they like to say, right? So yeah, I mean the 2-1 buy down, I mean there's a handful of buy down options which are really going to be key where if and again like every seller is a little bit different, they're in different positions, how much equity they're sitting on, what's their disposition, do they need to sell quick? So there's a handful of options buyers can utilize to leverage the seller crediting them some money to buy down their rates for the first year, 2 or 3, depending upon which program they pick and why, So it's really important that you're lined up with a great real estate professional, kind of like CR Sims, as we all know, rock star up there. She can really get into the mind of the listing agent or the sellers and really understand like, hey, is this an opportunity that we can really throw that option on the table for our buyer clients and just put them in the best position possible. And there's a lot of people that, compare this, the apples to apples comparison is going to be, well, hey, I need $15,000 for a buy down option for my client, or let's reduce the sales price by 15,000. It looks like it's the same amount. The sticker price goes from, let's say, 700,000 down to 685 by reducing it. So on paper, you're like, man, that's a big jump. That's going to benefit me. But this buy down option you want to discuss is actually going to put if you buy a home, years ahead of the game versus dropping that price point by the same equivalent amount of, let's say, $15,000. So yeah, it's a great product. It's actually, a lot of people think it's new. It's been around for years. It's just been collecting dust on the shelf. I got in 2002 and nobody really used it. After the market imploded, rates were starting to come down, so nobody really needed it. And then we kind of hit that wave back up, and we've been riding, since obviously 2021. Rates have been going up at an accelerated pace we haven't seen for a long, long time. And that's when we kind of pulled this product off the shelf. But it's been around for a while, just a lot of people don't know about it.
Yeah, Ryan, I didn't know about it until just
Yeah.
pretty recently, just getting to hang around you and Sierra and professionals like you guys that uh, explained this to me, right? And so when I heard it, I really thought it was genius, and I thought of those people. So um, kind of who I thought this was really good for is, you're going to work, you have a career, I came from a union background, right? I used to work for Southern California Gas Company. And so being in that union, we would have contracts that were negotiated. And so we knew exactly what our raises would be before they came. So I thought, man, if I already know I'm getting these raises, this can kind of ease me into a home at a lower monthly payment the first couple of years while, I wait for my income to kind of catch up. And so, yeah, I thought it was amazing.
Yeah, that's that old phrase, more money, more problems, right? So more money you make, more taxes you got to pay. I love my children, but the child tax care credit, deduction, it's a drop in the bucket compared to the benefit of being able to deduct everything you can when owning a home, So, and that's just kind of the universe we a lot of first time buyers or move up buyers or move down buyers, whatever you want to call it, is you really got to align yourself with professionals to really dig into the weeds for your short and long term goals because just that jump of getting in, like you mentioned, if you're sitting there on that 2, 4, 6, 8% continuous raise every year, even when I bought my first home, like it's like no reason to sugarcoat. It's scary as hell to make that jump, right? You're going from 2,000, 3,000 a month in rent up to 4 to 5,000. And you think, man, how am I going to make this happen? But if you really tighten the belt, there's some homework we have our clients do as far as really seeing where you're throwing money out the window. Like myself personally, when I did it, I picked up like 600 to 800 bucks a month just straight off the top, blowing money to the wind, right? On just stupid stuff. So, but being able to see past, what the scary part is and digging in, where if you can get in where you fit in, as you make more money, especially when you're younger, man, you never think you're going to be making that much money as our parents. But as you grow older, you get wiser, you get better positions, you get, pay increases. And that's going to help you to look back in, 2, 3, 5 years and be like, man, that payment was scary. Now I'm sitting comfortable. But it's really digging into the weeds to see how you can get there. And like one of the buy down programs is one of those big tools that can help you bridge that gap because this is a window of opportunity and I'm screaming it from the rooftops and I know it's scary and it's typical somebody in my side of the world, but this window of opportunity for buyers to have the leverage to one utilize this program but also not have to give away the farm and not have inspections or the seller repairs, that window's closing because when rates come down it's going to be an all out melee again, and if you don't have 50, 70,000 to put down above and beyond on just your initial offer, odds are you're not getting looked at. It gets pretty dicey out there when the supply and demand's off kilter and the sellers are in the driver's seat.
100%. And the reason I'm so passionate, I've mentioned it in other videos I've done, but the reason I'm so passionate about this is because I had bought my first property in 2008 and my mortgage was $2,000 in Laguna Hills, California, right? To live there today to rent, it's 3,200 bucks.
Yeah, crazy.
Um, just to rent the same place that I bought and my mortgage. By the way, then I refinanced it a few years later and my payment went down to 1629. That was my exact payment. And so if you guys can just imagine, this is not like your grandparents telling you, oh, I bought a house in the 1970s for $20,000. This is me. We're talking about 16 years ago, right? And so if you can just kind of have some foresight into the future, 16 years into the future, if you're paying half of what everybody else is paying for rent, you're sitting in an amazing spot, right? Financially. And so I always tell people like this is going to help you become inflation proof. And it's really going to, like, you mentioned sacrifices, Ryan. I educate people like if we're going to plan for real estate, that might even mean, hey, let's sacrifice some of this 401k and redirect it somewhere where it's liquid and we actually put it towards your goal of being a homeowner, right? And
Yeah.
so you sacrifices have to be made, but I mean, when you look at the long run, this is going to do so much more for you and it's going to make your life better year after year. It's going to do so much more for you than your 401k. So the sacrifices are definitely worth it. Ryan, I know you have some documentation and some stuff, but I definitely want you to kind of get into the numbers. So those people that are thinking about buying homes, what I really want to get out today is I think a lot of people are a lot closer than they think they are, right? Because it's like this huge mountain in people's mind, but I think when you show some of these numbers and the buy down, it's going to actually say, hey, you know what? Maybe I can make a couple sacrifices. I can get there, right?
Yeah. Yeah, and even if you can't get the seller to pay for a buy down, there's something called an effective payment, which is, we don't need to get into it this time around, but let's say your payment's $3,500, your payment's probably going to be 85, 88% of that after you get to write off 100% of the interest on the mortgage and the property taxes. And if the new administration lifts the SALT tax limitation from 10,000 to 20,000, or in best case for California home buyers is they just get rid of it altogether. I mean, that's going to be another windfall of being able to write off even more and getting even more of a refund from Uncle Sam. So even if you can't do it, like you said, I mean, you are a lot closer than you think once you really get the education on it, on what it really means, because rent at 3,000 is not the same as a mortgage at 3,000. Rent is going to be going up or down, and you have no tax incentives to be able to write off in that, of course, right? So, but yeah, I'll just jump into this here high level for you, just to show you guys some of the buy down options. Um, let's see. So when you're looking at the buy down options, there's technically four. There's a 1-0, but there's also what they call a 1-1. So this is assuming, just to keep numbers even, today's current market rate is this 7%. So if you come to us and we're like, hey, based on your scenario, what you're putting down, all that good stuff, your 30-year fixed mortgage rate is 7%. So the seller would pay on a 1-1 for your rate to be at 6% in year one and 6% in year two. And then year three through 30 years, it's going to go up to the current market rate of 7%. So it's still a 30-year fixed loan. It is not adjustable. It's just the money that the seller puts into escrow for the buyer is prorated to offset the payment for you, the homeowner, when you get in. So in the first year, your payments are lower. Second year, depending upon how you choose it. But the 2-1 buy down is 2% below the current market rate, which again, assuming is 7%. Year two, it's 1% below, and then year three through 30, it goes back to the 7%. So the more of the buy down you take on, the more the seller is going to have to pay. So I've seen 3-2-1 buy downs where I'm helping my agents that are selling the homes. The buyer's asking for a 3-2-1 where you can see the seller's going to pay for 3% below market rate in year one, 2% year two, 1% in year three. So this one's more aggressive than anything else because depending upon the price point and what your new loan amount's going to be, I mean, that could be asking the seller to cover 25 to 30 G's for just the buy down. If you go to a 2-1, it's going to be a little bit cheaper, maybe like 14, 15,000, because you're only prorating the reduction for a couple years instead of 3 years. And same thing with the 1-1, and then there's also a 1-0. So the option that you choose, you got to be smart because depending upon where the seller is, if they don't have a lot of money, maybe the 1-1's going to be your best option because it may be only 8,000 to the seller versus the 2-1, which may be 14,000. So you do have about four options to choose from. But again, working, hand in hand with a real estate professional that can really get in there and figure out where that seller might be at is going to be super beneficial to anybody buying a home. Were you going to say something?
No, I was gonna say it's a huge deal because when you really think of, especially the first few years, a lot of your payment is interest,
Yep.
right? The bulk of your payment is interest, and so you're saving a ton of money here on your monthly payment. But yeah, I definitely want you to get into some numbers so people can get an idea um, what that potentially means for them.
Yeah. And a lot of people are like, hey, all I'm doing is paying interest in the first 5, 10 years. Well, that sucks. But to me, I see it as a blessing, especially when you're young and starting out, because interest to me means tax deduction with the IRS, which means I'm getting more money back. So you got to look into the silver lining of it all. as salesy as that sounds, right? So let me jump into this one here. So this is kind of the same thing, but with the 1-0 showing up. So just the function of this here is, so in your first year it's 7%. This is just the principal and interest. So that does not include taxes, homeowners insurance, HOA. So based upon the loan amount and the rate, your principal and interest is 33.26. So you can see in year one on a 2-1 buy down, where year one the rate's 2% below, you're saving $642 a month, which means you're saving 7708 and some change in year one. Year two, you're going to be saving $328 a month. And if you ride it all the way out, that's going to equate to that 39.45 and 12 cents. So in the first 2 years alone on a 2-1 buy down, you're saving this 11,653 bucks. That is a ton of money. And if we look at it compared to buying a home, I think it was here where if we did the price, if we did a month, a reduction of, what was it, 15,000? Yeah. So 15,000 reduction in purchase price on the left side, you're only saving $94.80 versus 11,000 and some change in the first 2 years. So if you're in there for 94.8 savings a month by just reducing the sales price over 24 months, you're only saving 22.75 and 20 cents versus the 11,024 cents. So on the 2-1 buy down, you're 8,700 bucks ahead of the game in just the first 2 years. And in this scenario, not to get too deep into it, but if you wanted to save the same amount on a 2-1, if you're only reducing the purchase price, it's going to take you 134 months, which is, I wish I could do that math on my head, 11 years and some change, just to get the same benefit out of the 2-1 by a price reduction. So it's definitely well worth it. And this kind of shows the same here too. $600,000 purchase price, 5% down payment on a conventional loan at the same market rate of 7%. You're taking that purchase price from 600,000 down by 13,000, which is what the 2-1 buy down would cost the seller. And you're only saving $82.16 a month. So 2 years savings of 1971, and a 2 year savings on a 2-1 buy down is it's 13,285. So, and just to kind of dig in one more layer here, if you do refinance, let's say smack dab in the middle, this is prorated, meaning that the servicer of the loan that that buyer is going to pay, they're prorating it every month, dipping into that the seller put in. So if you refinance, let's just say 12 months in, you're going to get a refund of 44.97 than whatever's left over for the second year. Now, I don't think we're going to be, like, some people are saying rates are going to be in the fives this year. I think that's craziness. I think, if anybody, and even my guesstimate, you got to ask God on it, right? But if I was a gambling man, I'd probably say budget 18 to 24 months, before we hit the bottom of new lower rates, which, not to, ruin everybody's weekend, but it's not going to be in the twos and threes, right? That was an artificially created moment in time with mortgage rates. But if you can get in where you fit in, 18 to 24 months, you ride out the 2-1 buy down, or if you refinance somewhere in the middle, you can really take advantage of that program and then fix yourself in for the long haul, and hopefully you never have to talk to somebody like me again, you know. But it's being able to get into that position allows them to get with somebody like you, because I mean, my God, like, when it goes bad in life and people call me, like I had a loved one passed, or my husband just passed and it's just me on the loan, or maybe they're not on the loan and they're not protected with an insurance policy that you set people up with, or have a trust set up, in a nightmare. Like, I cannot explain that. I cannot, like, stress that enough to people. If you're not on the title and you're not on the loan, you technically cannot even call that lender and deal with them. you've got to jump through all the hoops just to be able to communicate with them. Hope to God it's on an auto pay and you're not starting to go backwards on payments and missing them where they can start a foreclosure process. So being able to get in where you fit in, getting with you just to protect your butts on the long run is vital.
Yeah. Yeah. I always say people don't plan to fail. They fail to plan, right? And you got to have a plan.
100%.
And so, but yeah, I love those numbers, Ryan, because maybe 15,000 on the purchase price sounds like maybe a big deal. But when you see this actual savings that you're getting, I mean, you're saving 20% roughly on that. Like when you look at the actual payments, I think you showed 3,300, but you showed that first year payment on a 2-1 buy down of about 2,600. I mean, that's a solid 20%
Yeah.
roughly that is off of your mortgage payment. And by the way, Ryan, does that affect the pay down schedule, the amortization of the loan? It doesn't, right? Because that money is still being paid, but it's just from the seller.
Yeah. That portion that you're not paying is coming from the seller. So
Yeah.
you stay right on track. But even if, there's also the devil's advocate of, hey, I don't want to keep refinancing because it costs money. But the way I tell people is like, even for myself, when I refinance, all my equity is funny money. It's like stock market money. So if I can buy today and I can refinance later to be able to get a lower rate in payment, that's not my money anyways. Like only God knows when I'm going to sell this property, where the values are going to be, and then I'll know kind of what my position is. What I do in 24 months or if I refi, that's not going to make or break me in the future, you know, because only God knows where that value is going to be, how much you're going to owe, and how much you can walk away with at that time. And then there's also and it could be another conversation for another time, but buying today and refinancing when rates come down, that's when everybody's going to flood the market and values are going to shoot up. How much, you're going to be tens of thousands of dollars further ahead in just the first 5 years. And I know we got that worksheet I've showed you on it, but it's a lot to digest, right? But it's the God's honest truth. So when people tell you, like, man, your window of opportunity of not only being able to take advantage of this program, but get in front of the crowd that is coming and the mayhem that's coming is unbelievable. Like you just can't stress it enough. As
Yeah.
weird as and ass backwards as it sounds.
That's another reason I'm such a big believer in real estate is you just think like how much land is there? Like you can't inflate land, right? There's just so much land. There's so many, like we're in Southern California, there's so much space here in Southern California, right?
Yeah,
And you start looking at like the demand, it's not just people anymore, right? There's institutional investors, there's investment money, being poured in. I think even BlackRock is buying quite a bit of real estate, right? And so, when you start thinking about the demand on this land, now, like you mentioned, we don't know where the value is going to be. We can't predict the future. But if you just look at what's going on, Ryan, I don't know about you, but I almost feel like there's a window, like you just said, like there's a window and that could close, right? To
hmm
become a homeowner at some point. Not that it's completely closed off, but it's just going to get harder and harder and harder the more demand there is, on the properties. And so that's why like I encourage you guys, if you can make this work, yeah, I encourage you guys to connect with Ryan. If you're at a point where, hey, you know what, I have a great income, I've been thinking about buying a home, maybe I can swing it, connect with him, see what those numbers might actually look like, because maybe you're a lot closer than you think. And that's really the message I want to get out today is just you most likely a lot closer than you think you are. So just have that discussion, right? See what those numbers might look like, see if it's something that you can make happen. Because in the future, we don't know what's going to happen. I know sometimes a lot of mortgage people and real estate agents, they're going to talk about, well, in 2 years you can refi, right? And the truth is we don't know, right? Like we don't know if you're actually going to be able to refi and lower your payment because what if the rates go up? You never know. But if they do go up, then you're going to be really thankful that you got locked in at a low rate, comparatively, right? So, Yeah, guys, if you guys can just reach out, I'm going to put Ryan's information in the description so you can reach out directly to him. You can also just request his information through me as well. Brian, is there anything else you would want to add or say to the audience?
I mean, even, kind of like you said, like, rates go up, then you're locked in. I mean, even worst case is still best case if you're at that age where, you're a first time buyer, you're hedging your bet by getting into a home, you know? And I think also a silver lining is, hopefully this new administration gets the inflation out of the market, right? So buying the home and the payment's one thing, but then we also have food, gas, children, cost of living, right? And if that cost of living can come down over the next couple of years, that's even going to be better on your pocketbook when you buy that home, because now you're going to get the deduction from the home. Then everyday costs are going to go down too. I mean, we're at some pretty extravagant numbers with inflation. And even though, like, it's statistics, right? Government's always snowballing us, but we're finally starting to see cracks in that inflationary in the areas that have high inflation. So if you can get in front of it, and then I think, I think we maybe mentioned this too before we jumped on is, I'm working with an attorney right now who she's looking to buy a home, and she's getting calls left and right from people that are trying desperately to find a place to rent, and they're getting price gouged. So now we just lost all that inventory. Like you said, there's only so much land, there's only so many homes that are built ready to go. And now that just got squeezed even more. So are you going to be a part of the people that buy property, or are you going to watch the pressures for rent increase because now you got all those homeowners influxing into the rental market? So it's not all doom and gloom. It's actually happy days, but you got to get past the noise of social media, the noise of the news. My God, I think I'd jump off a roof if all I did was watch the news, right? So, but the benefits are endless, but you just got to run the numbers, right? Well, with our clients, we do a full-blown consultation. They see behind the iron curtain of the lending world, the numbers, how they work, how they play together. It's just maxing out your approval and then reverse engineering it into your sweet spot where you want to land. And that's where it's going to give you clarity on reality, right? And then you can make that educated decision. But just, the way the economy is going, I think, there's going to be that silver lining as inflationary items drop. That's going to help you if you're kind of on that edge of do I buy, do I not buy, because the cost of living is going to go down outside of your shelter costs.
Yeah, definitely. And just to just looking at the last couple of years, right?
Oh,
And
crazy.
the inflation has been insane. And so that's really what, as somebody who helps people plan their finances and protect their assets, that's really what pushed me in this direction of really encouraging people to get into real estate, if they can, because I know how that looks long term, right? And how it protects you from inflation. And if you're sitting at a mortgage, like I said, half of what everyone else is paying, you're in a good spot. Like you're not stressing during this time, right? Next time it happens where we have inflation picks up, you're not going to be stressed. And so it's just going to put you in a better spot. It's going to provide so much opportunity for you. So yeah, guys, I encourage you. I appreciate you, Ryan, hopping on and being on the channel.
Appreciate you having me, man. They don't
Yeah,
let me in
definitely.
most front doors, so I like this. This is nice.
Well, we're definitely going to do it again. I think there's a lot of things that we can cover and bring a lot of value to people.
100%, man. I'm always here to help you.
Awesome. Appreciate it.